We have with us World Bank Country Director Auguste Tano Kouamé. Thank you, August, for joining us. If I could begin with, the update has kept the growth forecast unchanged at 6.3. And if we see some of the recent updates by other agencies, some have actually raised their projections. So, in backdrop of these raises which have come, is there a case for revisiting the growth forecast in some time?
Thank you, Deepshikha. Good to be with you. Yes, we are forecasting the Indian economy to grow at 6.3% in fiscal year 2023-2024. This is the same forecast that we had 6 months ago. This being said, let's remember that the economy grew at 7.2% last fiscal year, and 7.2% was very strong. It was the second highest growth rate among G20 countries. And that growth rate was almost twice the average for emerging market and development economies. So India is coming out of a year of very, very strong growth, and there is a base effect whereby it's harder to maintain that growth when we've achieved it already. And more importantly, we are in a world with a lot of headwinds. There are geopolitical issues, high inflation, high interest rates that are making it difficult for countries to grow very fast. In this context, the 6.3% that we're forecasting for India is still going to be one of the highest growth rates among major economies in the world. So India's growth rate of 6.3 is very respectable. This being said, yes, we know that some institutions have raised their forecast, but I'm happy to know that, in fact, they've raised their forecast to come closer to our forecast of 6.3%. So we feel we have the data suggest or support our 6.3% forecast. That's why we're maintaining it for now, but we will also revise our forecast perhaps in the next 3 to 6 months if we have new data suggesting that growth should be higher or lower. But for now, we're maintaining it as 6.3.
You did mention, the risks on the external front, and we've seen the Fed came out with a statement recently, and they've indicated that there could be a possible rate hike. So, which means the higher interest rates for a longer period. We've seen dollars strengthen. So what kind of risks could this pose for the Indian economy as such?
Yeah, thanks, Deepshikha. It's true that continued high inflation globally, which perhaps will lead global central banks to raise interest rate and therefore create a high interest rate environment as well, could hurt growth. Combination of high inflation and high interest rate is really not a good combination for any country, especially emerging market economies, because the high inflation makes it difficult for countries to import inputs at affordable price and produce domestically and consume or re-export. High interest rate makes it difficult to attract foreign direct investment, or it makes it difficult to borrow and invest domestically. So these will not be good combinations. They may represent, as we say in our forecast, downside risks to our forecast.
Do you see pressure on the Indian rupee growing in view of these challenges that the external environment could pose going forward? And while Reserve Bank has sort of maintained a pause so far, but in view of these developments, do you see a possibility of RBI sort of coming in and also joining the other central banks?
I generally avoid commenting on central bank policies, especially when it comes to forecast, because it's not something I don't like the World Bank, feeding into speculation, and especially when it comes to monetary policy. So that's not
Sure.
our role.
But on the rupee, how do you see rupee, behaving with these challenges sort of coming on the external side?
So let me put it this way. I think that India has a very, very comfortable level of reserves, foreign exchange reserves of almost 600 billion. Up and down, but very comfortable. One of the largest reserves in the world, and this has allowed India to manage currency volatility fairly well. And I don't see this changing going forward. I don't want to speculate what will be the exchange rate or where the rupee will be tomorrow or a few weeks from now. But if you look at the reserves, that it provides comfort that there is enough cushion to manage global volatilities. And that's consistent with the story that we have in our forecast, which is that India has been very resilient, one of the most resilient economies to the headwinds, whether they are headwinds from geopolitics or inflation or exchange rates.
You've raised your inflation forecast. We've seen crude oil sort of rising, and there are apprehensions that it may cross $100, which could be a huge challenge for India. So, does your inflation forecast take the rising food prices into account, or is that something that's not yet been built into?
So the short is that we forecast an increase in crude price, but not to 100. We think that it may reach $90 in the short term. If it were to go beyond $90, then we may have to revisit our forecast. But for now, we think a $90 oil price is consistent with our forecast for inflation and for growth in India.
The government, if we've seen last 2-3 budgets, there's been a huge capital expenditure push. And the idea was till the time the private investment doesn't kick in, the government should push its own expenditure.
Correct.
But what is your view on the private investment? Has the cycle sort of turned?
The cycle on private investment has not turned completely yet. The government still is finding itself in a position to having to increase or to push public investment for several reasons. One is, of course, India has very high ambitions for growth, and that requires public investment. It requires big, very a network of public asset, public infrastructure for today as well as for tomorrow. So if India can afford to invest now, it's a good thing to do because it will be needed today and tomorrow and for the next 20, 30 years and beyond. The second reason why the government has had to push public investment is coming out of COVID. We saw that in many countries, investment took a hit. And many governments now, and this is a fact that we see across South Asia, many governments are investing more. Public investment is higher across South Asia than it was before COVID. On the other hand, private investment is still lower now than it was before COVID. So private investment has not picked up yet, but it will. It will, because in India, we know that public investment generally creates opportunities for private investment to kick in. So that will happen. We don't know yet when it will happen, but what we call the crowding in effect of public investment will happen. And when it happens, you'll see a more dynamic private investment. But maybe to have a more comprehensive answer to this, the public investment alone is not enough to create conditions for private investment. It is needed, but it's not sufficient. In addition to public investment, you also need policies and reforms and regulations that make it easier and more attractive for the private sector to invest.
If I could just come to policy and reforms, as you know, prime ministers set this goal of India becoming a developed nation by 2047. So, what kind of policy measures are required to actually facilitate the country reaching that goal?
Well, I'm sure the government has the answers. So, and we have conversations and dialogue with the government, and we share with the government our thoughts on the policy measures and reforms that could help. There is no single formula. There will be several formulas, especially when you're dealing with a country with many states at different levels of development. And those measures and reforms we've been discussing, some of them are state specific. So
yeah, so
now,
if I could just come in here, do you think the center government has done enough on the reform side, and now ball is in the court of state governments to actually push reforms and to ensure the support that the growth really needs?
I'll be more specific by way of answer, because we know that in every country, regardless of the income level, there are always more policies and more reforms to be considered. So you can't be in a situation where you'll say, part of the government has done all it needs to do and there is nothing else to do, because it doesn't happen in any country. Otherwise you won't need a government anymore, right? So what could help? What may be needed going forward? I said earlier, private investment. For India to become a developed country or an advanced economy or a high-income country by 2047, India needs to grow, according to our calculation, India will need to grow at 8%. We are now at 6.3%. So, there is a way to go to reach 8%. One thing that would be needed is for the private sector private investment to pick up, for private capital to come in and be invested. Domestically as well as foreign investment. So that's very, very, it's needed, because public investment cannot be the drivers of investment for the long term, because otherwise it will put pressure on the fiscal balance, and the fiscal consolidation agenda may be difficult to manage. So private investment is key. For private investment to pick up, there are a number of reforms that we could consider. One is making it easier for the private sector to have access to land for investment purposes. Another one is for the private sector to be able to find the right skilled workers at the right place at the right time. Skills are abundant in certain part of India, in certain areas, but maybe they're not available in other parts. And maybe they're available, but they're not the right skills. So an agenda of skilling that brings the right skill together with the right need, bringing demand and supply together would be important. For that, the skill centers, the ITIs, maybe we need to revive, and the private sector will need to be consulted to find out which skills are needed before investing in those skills for the young people. The third thing that is needed is to make it easier for people who want to work to find a job. And we hear that some young youth find it challenging, maybe some women also find it challenging, or maybe don't find it attractive to go and work. So there are a number of things that can be done to make it easier for the supply of talent and skills to want to work. And I'm thinking more in terms of female labor force participation. Perhaps a third thing that would be needed is, India has done a lot on financial inclusion, improving the strength of the financial system. The financial sector in India is very strong now. It has been improving. It was not the case several years ago, but today, banking sector is strong. Corporate balance sheets have been improved. NPA, the non-performing assets, are now low. Credit is growing. Financial inclusion is growing, but there is some reforms that could be envisaged to make it easier for MSMEs to have access to finance at an affordable rate. And finally, on the economic services, firms find it difficult, perhaps, to afford the kind of electricity they need, and linked to that, the green agenda will be important. How to make electricity more abundantly available at an affordable price for firms, because right now it's subsidized, for consumers, for farmers. But how about firms, and making this electricity greener, so investing more in renewable, in green, where India has done very well, but there is also more needs and more demand. These are things that could help the economy reach the 8% and become make India a high income country by 2047.
So, on the policy measures that you suggested, in terms of the World Bank's India program, the support that it gives to India, uh, what is the kind of support that the World Bank is extending in the current financial year? Has there been any change in the plan in terms of the priorities? Because obviously, climate change is a huge challenge that every country is facing. So, has that had any impact on the India program of World Bank?
Absolutely, yes. The climate change content of our program has increased a lot. Last year, 56% of our financing was in support of the climate change agenda. This year, it might be even a higher percentage. So we have a number of projects to support low carbon energy, for example, to support renewable, green hydrogen. We have programs to help with the distribution reforms, providing guarantees for rooftop solar, or investing or providing guarantee for biogas. So all these will help with the energy transition, and we're providing support also for air quality management. We're providing financing for skills. I mentioned skills earlier. We have a number of projects across many states on the skilling agenda, and now we want to do more to help with the logistics agenda, to bring the infrastructure that is being built, make it serve logistics, movement of goods, people, so that the economy is more dynamic and the cost of logistics comes down. Right now it is 13.5 to 14% of GDP, and the government's ambition is to bring that cost of logistics down to less than 10%. So we now are thinking of programs to help support that agenda.
So, what is the total India exposure at this juncture in terms of funding?
Total India exposure to what?
As in, what is the size of the India program?
Oh, the size of the World Bank India program? Okay, so right now we have about 100 projects under implementation in India for about 20 billion. So this is the size of program that we have now under implementation. Of course, every year we add new projects and some old projects close. This year, or last fiscal year, because this year is still evolving, last fiscal year our new financing to India was $4.3 billion, in 15 projects. This year we don't know what it will be, but it might be in the same ballpark.
One last one before we close. We had recently data from the Reserve Bank on the household financial savings, which were at a decade's low. Do you see this as a concern area?
I don't think so, because savings rate in India are quite respectable, and investment rates in India are also quite respectable. And they should be a bit higher. India should reach maybe investment to GDP ratio of 35%, but for that, savings rates have to grow and maybe reach 32%. Otherwise, you'll have an investment saving balance, and that would mean a balance of payment deficit, which may be difficult to finance in a global context where interest rates are high. But savings should be higher. I think savings are going to be higher going forward, because people save when they can trust the banking system, the financial system, and in India the financial sector is very strong now. People will save more. I think post-COVID, people came out of COVID with a higher savings rate, because you couldn't spend to save. Now people are catching up with spending. After they reach a certain level of spending, I think saving will pick up again.
Okay. Thank you so much,
Most
August,
welcome.
for taking out time for the Economic Times.
You're most welcome, Deepshikha.